Hi guys, this is Jonah with ForexRazor.com. Today is January 8th. Big day today, guys. We had our UK interest rate statement. We talked a little bit about that yesterday. And we talked about, what did we talk about, guys? Does anybody remember? We talked about buying pound USD after the interest rate statement. Now let's see what happened on the interest rate statement. Here is the interest rate statement right here. Now this was an as expected number. Okay, it was not a deviation. They were forecast to cut by a half, and they cut by a half. And we talked about what this was, and this is basically people have been selling the rumor and buying the news, and that's exactly what we've seen here. Now, I'm not going to lay claim that we captured this whole move, because we didn't. But I will tell you this: what we did capture with a 20 pip stop was definitely a nice profit. We actually walked away with 80 pips off of this with a 20 pip stop. So not a bad trade. Definitely could have gotten a lot more, but the upward momentum was there. This thing did exactly like what we talked about doing. And guys, just keep that in mind when you get an as expected number. If you're looking at economic data, doesn't mean it's not tradable. You just have to know what market sentiment is. And if you can pin market sentiment, it doesn't matter if it's an as expected number or the number deviates vastly from what's supposed to, you can still make pips. Let's take a look at the hourly here and try to figure out exactly what's going on. Tomorrow, guys, big day. We got non-farm payroll coming up, and we're going to discuss that a little bit here, but we're actually going to do a special video about non-farm and give you a little insight into what to anticipate as far as the market for the non-farm payroll, which is coming up tomorrow morning. That's January 9th at 8:30 Eastern Standard Time. So definitely, if you're trading the markets, even if you don't trade economic data, it's just fun. It's fun to watch non-farm. You never know what the heck it's going to do. It's very volatile, and it's just an interesting experience. So if you've never watched non-farm payroll, check it out tomorrow. Looking at the hourly here, 4-hour here on pound USD, you can see that we are moving back up. We've broken down here. Now we're moving back up. Guys, I have to say I'm bullish. There's no way around it. In this market, I have to be bullish. And I'm bullish for several reasons. I'm bullish because pound is undervalued. I'm bullish because the interest rate statements are over. I'm also bullish because non-farm payroll is probably going to be a disaster tomorrow. And even if it's not a disaster tomorrow, people are probably going to trade the sentiment tonight like it will be. Because ADP's numbers were terrible, just like we talked about yesterday in the video. Horrible ADP numbers. I think we're going to see a good bit of sentiment selling on the dollar. And that's going to probably bleed into everything. We're seeing it a little bit on the yen and on the euro as well. And we'll get into that in a second. But anyway, this is a little bit longer term outlook here. So look to get bullish here. We will talk a little bit more in detail about non-farm as we move on in the day here. We're going to take a look over at Euro USD. And we're getting some nice price action here as we're talking about. Now, what we've seen is the beginning here of Euro USD moving up. Again, dollar weakness in anticipation of non-farm. And bottom line, dollar needs to be weak right now. There's nothing fundamentally strong about the dollar in any sense of the word. So I think all the currencies are probably a little undervalued to the dollar, with the exception of maybe the U.S. yen. I mean, the yen has definitely gobbled up ground against the dollar, and with good reason. Risk aversion currency, and we've seen that, and that's why that pair has been holding, between the high 80s and the mid 90s. But as far as Euro USD goes, we still have this trend line in play. My guess is we will probably contend with this trend line tomorrow, guys. This thing will probably challenge this trend line around the 39.50, 39.80 level tomorrow. We will probably see this after non-farm. That's my prediction for the day on the euro. Now, if we come down here to a 15-minute chart, I want to show you something else that's pretty interesting. We have a video on currency correlation, guys, and the currency correlation in simplest terms. I don't want to get into it in detail, but it's as simple as every currency affects every other currency. So if you understand how currencies affect each other, you can take advantage of other economic data or big moves in one currency and a delayed reaction in the other, which is what we see here today. Looking at these levels here, guys, guess what this is? This is the UK interest rate statement. And no, this is not the pound. This is the Euro USD on a 15-minute chart. And what you see is the euro absorbing some of this move just like the pound did. But guess what? It took forever for this thing to happen. See, this candle 7:15 is when this candle opened. So here we are 15 minutes later after this move already starts happening on pound USD. We start moving up. Well, what did we do here, guys? We bought at the 35.54 level right here. And, you know, again, I'm always a little bit more conservative than I could be. We only ended up banking 90 pips off of this trade. But again, we're using a much smaller stop, simple as trading the currency correlation. Same outlook for this pair. As far as moving into Asia, I do think we will see continued dollar weakness, probably all the way up into non-farm payroll. After non-farm payroll, it's all up to the numbers, and we will talk about that, like I said, in another video we'll do specifically for non-farm later on today, where we'll go into detail about how to trade non-farm, what to expect out of non-farm. But I'll tell you this much, non-farm is a trendsetter. Whatever non-farm does, we'll probably see affect the market for the next 3 days to a week, depending on what the numbers are. So just keep that in mind. You know, I think we can be pretty safe to say that we ought to be bearish on the U.S. dollar heading into non-farm. After non-farm, it just depends on what non-farm comes out. Let's take a look at U.S. yen. We've also talked about this pair back several days ago when it was trading up around the 94 level. And we talked about the need for this thing to get short based on the appreciation of the pound. This, again, was a delayed reaction. Didn't really have anything to do with economic releases. It was just the fact that we had a delayed reaction. We saw the dollar getting weak against the pound. We saw it starting to get weak on the euro. And then finally the U.S. yen said, you know what? This is a weak dollar, and the yen started gaining some ground on it. So that's what's happened here. We're moving down. It looks like we're making a little head and shoulders pattern here. This is a 4-hour chart, again, guys, on U.S. yen. And I do think that this will continue, especially if we get negative non-farm figures tomorrow. We should see this thing continue down without any problem. Well, guys, these things just keep running longer and longer, and I hope I'm not boring y'all. But we'll be back later on today here with a non-farm preview. And if you're not familiar with non-farm, or you're familiar with non-farm, I still recommend you to check it out, guys. Again, this is Jonah. Today is January 8th. Y'all have a great day, and good luck with non-farm.